The government is admitting that it is running the world's biggest Ponzi scheme. The key to a Ponzi scheme is to keep it secret. We're telling everybody it's a Ponzi scheme. The crazy thing is the lenders haven't realized what's going on.
Please join us for our next live stream, Sunday, October 10th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, October 10th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you're new to our channel or if you haven't already done so, please do subscribe, hit the bell to be notified of new updates, and give us a thumbs up. If you like what we do, we truly do appreciate your support. Peter Schiff, Chief Economist and Global Market Strategist of Euro Pacific Capital, joins us once again today. Peter is one of the few widely known economists and investment professionals who warned us about the 2008 financial crisis before it began. As a result of his commentary on the U.S. stock market, the economy, real estate, the mortgage meltdown, the credit crunch, subprime debacles, commodities, gold, and the dollar, he is becoming increasingly more renowned and sought after by investors across the globe. It's time to saddle up and silver up for Peter Schiff. Peter, welcome back. Glad to have you again. Fed Chair Jerome Powell recently spoke at a FOMC meeting and had a testimony upon the Hill, and in a nutshell, no rate hike, taper on the way, inflation running into 2024. Will we see this taper anytime soon, if ever, and what is stopping the Fed from doing a taper?
Well, it's possible that the Fed starts the process of tapering, but what I think is impossible is that it actually completes the taper, because the idea is to continue to reduce the monthly purchases, to taper them until the Fed is no longer purchasing any government bonds or mortgage-backed securities at all. And I think that journey is impossible to complete. I think before long, the Fed will not only stop the taper, but reverse the process. And ultimately, the Fed will be buying more bonds and mortgage-backed securities per month than when it began to taper. So right now, we're doing about $120 billion a month. Actually, it's a bit more than that, but that's the official rate. Let's say they manage to succeed in tapering that down to $100 billion a month or $80 billion a month. What I think is going to happen is they'll halt the process, and I think before Biden finishes his term, the Fed will be buying $200 billion a month, maybe more than that. And the reason they're going to do that is because government spending is exploding, but the willingness of foreigners to finance that spending through private loans is diminishing. Who wants to loan all this money to the U.S. Treasury at such ridiculously low interest rates, especially with inflation accelerating? Real rates are plunging, and so the Fed is running out of buyers for treasuries, and so therefore the only way to sustain the spending is for the Fed to get more involved and to buy even more bonds than it's buying now. And so it can't do that without expanding the size of the QE program, and that's exactly what it's going to do.
Any chance Powell may raise rates even without a taper?
No, rate hikes are not even on the horizon right now, but I think eventually Powell will be forced to raise rates, very reluctantly, because the dollar is going to be imploding and consumer prices are going to be exploding. But even when the Fed finally gets around to raising rates, it will be too little too late, because real interest rates will still be, solidly negative, even if the Fed nudges up the nominal rate. But the problem is, if they nudge the nominal rate up too high, the government doesn't have the ability to pay. And so that's the predicament that the Fed is in. The only way the government can pay its debts is for the Fed to monetize them. But as the Fed monetizes the debts, it creates even more inflation.
We're even seeing Treasury yields on the rise. It's gone up, I believe, some 20 basis points since that FOMC meeting. Should yields continue to rise, what would that be signaling to the markets?
Well, I don't know what it signals to the markets, but what it's actually signaling is higher inflation. These higher inflation premiums are being built into the yield curve. I think it also shows a decline in confidence in the ability to repay the debt with money that hasn't been debased. So it's a sign of inflation, a weak dollar to come, loss of confidence in the U.S. It's really reflecting a lot of negative things, and I think a lot of traders are whistling past the graveyard when they fail to contemplate the significance of what they're seeing.
And week in, week out, we're seeing that repo market, or reverse repo market, I should say, just continuously growing. Why are we seeing that daily reverse repo number grow? And what is the Fed doing with asset-backed and mortgage-backed securities?
Well, the Fed is taking them on their books because they don't want to see the rates rise. The fact that the Fed is so active in the market is an indication that there is not sufficient private demand to keep interest rates this low. And so the Fed is interfering with the market and printing more money to buy up the bonds for which there is not sufficient private sector demand. Now, this is a mistake because the private sector is trying to send a message that there's too much debt and that interest rates need to rise to curtail that. But the Federal Reserve doesn't want the market to function. The Fed wants to distort the market so it allows excess borrowing to continue so it can keep the bubbles from deflating. It wants to prop up the stock market, the real estate market, the bond market, and it wants to enable the government to continue to spend money that it doesn't have, and so it interferes in the market. But this is doing grave damage to the structure of the U.S. economy and is going to lead to a much worse economic implosion than the 2008 financial crisis, with far greater implications for the dollar, for the cost of living and the standard of living of every American.
Okay, because if I understand this right, when we had QE, the Fed was basically throwing money in the system, and now with the reverse repos, they're trying to throw it in the furnace and burn out all this excess cash?
No, they are supplying the market. They are with cash. They're providing credit that the private sector doesn't have. You know, so they're coming into the market and intervening to affect an outcome that is opposite of what a free market would produce.
I want to bring up an article from WallStreetOnParade.com. For more than 5 years, the president of the Dallas Fed, Robert Kaplan, was trading like a hedge fund kingpin in over $1 million transactions in the S&P 500 futures, while refusing to follow the requirements of the Fed's financial disclosure, from where it can be examined whether Kaplan had inside information from the Fed at that time. Is greed and corruption starting to take over our institutions and even regulators?
Well, there's always been greed and corruption in our institutions, so I don't think this is anything new. With respect to these particular trades, I mean, for me to actually have an opinion on whether or not I think Fed officials were actually acting on and profiting from inside information, I think I'd have to look at the actual timing of these transactions and their relative proximity to market-moving statements that they may have made, because they are in a position, based on what they say, to influence markets. And so if you can see a pattern where there's a trade put on and then it's right in advance of a particular statement that moves markets, and then there's a profit that's realized by closing out a position, then it would be clear to me that they were, basically insider trading in these markets. But just if they simply were just buying the S&P, I mean, everybody's buying the S&P, and we all know the Fed keeps printing money. This is not inside information. I mean, they're telling everybody that they're going to keep printing money. So simply, being invested in the market doesn't necessarily mean, in my opinion, that they were doing anything nefarious. But it could be if I actually saw what they were doing and juxtaposed it to what was being said, and if it looked like they were actually front-running statements that they knew, specific statements that could be market moving, and then they were trying to profit, then that would definitely be a problematic in my mind.
Yeah, that's a great point. The debt ceiling talk continues, and it really seems like that debt ceiling can is just simply being kicked down the road. But Peter, why is it so hard to do the inevitable and just simply raise the debt ceiling? I mean, why even care now?
Well, obviously, it's not hard. I mean, they've done it, 70 times or so since 1960. I forget how many times they've done it since we first had the debt ceiling. It came about in 1917, so it wasn't something that was always there. It was the result of the creation of the Federal Reserve and the potential moral hazard that created for the government borrowing too much money. So the debt ceiling was put in specifically to prevent the Fed, the Treasury, from abusing the Federal Reserve and using the Fed's ability to create money and buy treasuries to run up too much debt, so they imposed the ceiling. The problem with the ceiling is that it can be raised. Otherwise, it would have worked. But giving Congress the ability to raise the ceiling, that's the problem. And of course, the debt ceiling is not part of the problem. It's part of the solution. Unfortunately, it's never used because we keep raising it. The real problem is the debt. And, I'm very frustrated when I hear these politicians say that we need to raise the debt ceiling so we can pay our bills. The reason that we have all this debt is because we don't pay our bills. And the reason we want to raise the debt ceiling is so we can keep borrowing money instead of paying our bills. I mean, paying the bills is easy. Just write the checks. But we can't write the checks because we don't have the money. So we need to borrow more money so we can keep this Ponzi scheme going. And in fact, they admit it's a Ponzi scheme because listening to their testimony today, everybody says if we don't raise the debt ceiling, we're going to default on the money we've already borrowed. That is an admission that the ability to pay old lenders rests completely on the ability to borrow more money from new lenders. That is the very definition of a Ponzi scheme. And the government is admitting that it is running the world's biggest Ponzi scheme. And, to show you how little it understands about Ponzi schemes is the key to a Ponzi scheme is to keep it secret. You don't let the people know you're running a Ponzi scheme because, that's Ponzi 101. But of course, we've made that mistake. We're telling everybody it's a Ponzi scheme. The crazy thing is the lenders haven't realized what's going on. Eventually they will, and they're going to dump their treasuries and they're going to dump their US dollars. And that's when we have a real problem. It's not the lending debt ceiling. It's going to be the lenders that decide that they're going to impose their own ceiling on how much they're willing to lend, which I think will be nothing. And then the only lender will be the Fed, which means all the debt will be monetized, which means the inflation that we're seeing now is just the tip of a huge iceberg.
They're also floating around that $1 trillion platinum coin idea, again, to ease up on the debt, I suppose. Is this the solution to bring that under control? I mean, I know you just said the solution is to cut back on spending of sorts.
No, the platinum coin idea just will drop the pretense that we have any kind of fiscal responsibility or any kind of independent Fed. Because if the Treasury can just mint platinum coins and claim they're worth $1 trillion, then they're basically saying we're a banana republic. I mean, we don't have a real independent central bank. Congress just creates money out of thin air as much as it wants with absolutely no restrictions. And when they do that, there's no ability to shrink the money supply because there's no assets for the Fed to sell. All it's got is an ounce of platinum. And so if we're just going to keep on minting $1 trillion 1 ounce platinum coins, that is a recipe for disaster because once the inflation genie really gets out of the bottle, the Fed has zero tools to put it back in. And so you get into that dynamic that could lead to hyperinflation and the complete destruction of U.S. currency.
Yeah, I was just going to ask you, what does that even say about the financial state of the U.S. if we're even considering a $1 trillion platinum coin? But I guess you answered that simply with 2 words, banana republic. So I want to move over globally and bring up the situation with Evergrande in China. There were a lot of concerns we'd see contagion, and that has yet to develop, if ever. Why have we not seen contagion thus far?
Well, I mean, we haven't seen, a complete, unraveling of that situation yet. So I don't know that we've seen the first real domino to fall. And so that's why the others haven't tumbled as well. But, there's a lot of debt throughout the economy. It's not just with Evergrande. I mean, they've got more than most. But this problem is widespread. It's not just in China. It's all around the world. It is the byproduct and the consequence of these reckless monetary policies being pursued by the world's central banks. And those policies are still in effect. And I think everybody knows, to the extent that there is a big problem at Evergrande, they're going to sweep it under the rug by burying it under mountains of freshly printed paper money. So I think the moral hazards are already there. And I think while these headlines potentially move the markets in the short run, everybody knows the game plan. And nobody really fails. There are no adverse consequences when you gamble and lose. Everything gets socialized. Central banks come to the rescue. That is the problem with the system. And so, again, where this is going to manifest is going to be in inflation. You're going to see bigger increases in consumer prices than the ones that we're already experiencing, and ultimately a collapse of this fiat monetary system that is based on the dollar as the reserve, and meaning the most severe consequences will be for the dollar and for American citizens who depend on the dollar.
Okay, I want to stick with China for a bit. Their condo prices in some cities are now 57 times the average annual income. And that's even more than at the height of Japan's bubble economy, where condos were 18 times the average annual income. But in the U.S., we're seeing the same trend, where the recent S&P CoreLogic Case-Shiller Composite Index gained some 19.1% in the past 12 months. Are we going to see 2008 all over again with the housing market bubble, credit bubble, equities bubble, and the everything bubble looking to pop?
Well, no, I think it's going to be much different and much worse this time, because I think the Fed will continue to blow air into these bubbles for fear of a repeat of 2008. So it will continue to try to sustain the everything bubble, but in the process, it must destroy the bubble in the dollar, because the dollar has to be what's sacrificed to prop everything else up. And so then, unlike 2008, where the dollar went up, this time the dollar is going to come crashing down. And so it's not just going to be a financial crisis, but a currency crisis, a U.S. dollar and a sovereign debt crisis, which is a much greater crisis with far more dire consequences for Americans.
And with all these missteps from the Fed, the way it has really and truly backed itself into a corner, putting our livelihood, savings, even our wealth at risk, why are we not seeing as much love for gold as we might have seen in past times?
Well, there's a lot of misunderstanding out there. Most of the big money investors still don't get the gravity of the situation. They still have confidence in the Fed and other central banks. They still think inflation is not a problem, and if it were, the Fed would quickly put out the fire in a way that somehow won't even be harmful to the economy, the stock market, real estate market, the federal budget. So everybody's living in fantasy land. And then you also have the idea among a lot of professionals that, well, we don't even need gold anymore because there's Bitcoin or other cryptocurrencies. And even though they're not buying either, right? They're not buying gold or Bitcoin. They just assume that other people won't buy gold and they'll buy Bitcoin. And so that is helping to tarnish gold's image right now, or steal some of its thunder, in that you've got, the specter of digital gold taking its place. And of course, that's a bunch of nonsense, and that's never going to happen. But I do think that is helping to, cloud people's judgments as to, what they should be doing with gold. But I think when everybody is blindsided by the events that are going to unfold, when inflation really rears its head in a much bigger way, and the Fed does nothing about it. I mean, the Fed right now is bluffing that it's got these tools, and if inflation ever really becomes a problem, it's going to use the tools. There's no way it's going to use those tools. If it was going to use them, it would have already done it, because inflation is already a problem. They're ignoring the problem because they can't do anything about it. But the one thing they can't do is admit that they can't do anything about it. So they pretend it's not a problem so they can maintain the fiction that if it were, they would do something about it. Well, when that fiction is exposed as a lie, that's when you're really going to start to see the gold price taking off.
Okay, Peter Schiff, before we wrap up, can you let our viewers know more about your work and where they can find you?
Sure. I am constantly putting out a lot of information on my own podcast, The Peter Schiff Show. I would invite, your listeners to, participate and listen to those podcasts on a regular basis. They can do so at schiffradio.com. Also on my YouTube channel, The Schiff Report. And I think even more important than just listening to what I have to say, but it's following the recommendations that I'm making on what you need to do to protect yourself from this coming currency crisis, dollar collapse, to properly position your portfolios ahead of time to not only protect yourself, but actually to profit from these events as they transpire. In fact, the reason that there's such a great opportunity for profit is because so many assets are now mispriced, because the vast majority of people have no idea what's about to happen. And so that opens up this huge opportunity for profit because assets are mispriced. The things that we're buying are too cheap. But once the world recognizes what we've already figured out, they're going to rush to put on these same trades, and the prices of what we bought cheap will be much higher. And that is historically how you make a lot of money. Figure out where the consensus is wrong and then bet against it. You know, we did the same thing with the subprime market, betting against that. Well, I think this is going to play off with an even bigger profit than that trade did. And if anybody wants to participate and join me, they should, contact our representatives at Euro-Pacific Asset Management and talk to us about helping us build a portfolio for you to inflation-proof, to dollar crash-proof the portfolio, and to be positioned to profit from the way this collapse in the dollar is going to manifest itself throughout the world. There's going to be winners and losers. I mean, American consumers are going to be among the biggest losers, but there are going to be a lot of winners. And you want to align yourself with the winners by properly aligning your portfolio and your income streams in advance of that. And we are implementing those strategies for our clients. Of course, I'm doing it for myself, but also for our clients at Euro Pacific Asset Management. So definitely, before this happens, give us a call, check out the website, talk to our representatives. We're helping people all around the world managing portfolios, because it's not just Americans who are going to be affected. Everybody will be affected, and everybody needs to know how to prepare and make sure they are prepared in advance.
All right, Peter Schiff, Chief Economist and Global Strategist of Euro Pacific. We thank you for your time, and I hope we can do this again soon.
Sure, my pleasure. Take care.
That was Peter Schiff, Chief Economist and Global Strategist of Euro Pacific, sharing his views as only he can. To see more of Peter's work, please visit www.europac.com and Twitter @Peter Schiff. If you like this video, please give it a thumbs up and subscribe to the SBTV channel. Audio-only versions can be found on iTunes and Spotify.